A very good afternoon to everyone present. I welcome you all to this preview of a financial modeling masterclass. I would like to start this webinar by introducing our presenter for the day. Richard Wesson started his career by completing a Bachelor of Computer Systems Engineering with honors at the University of Technology, Sydney. Over the past 20 years, he has held multiple positions in both the private and public sectors, including research and scientific analysis and modeling at the CSIRO and UTS, financial transaction processing, EFT, and settlement at MasterCard, profit and loss ownership and management for Interwoven and Vision 2 Solution, strategic planning and management at Interwoven and Vision 2 Solution. All of these areas have a direct relationship with the creation, management, tracking, and reporting of financial models and results. Richard's mathematical, statistics, and scientific background combined with work in and with many companies allows him to explain financial modeling and concepts with a good balance of theory and practical application. On that note, I request Richard to commence the webinar.
Thank you very much, Austin, and good afternoon to all of you here present. I hope for the next 45 minutes or 30 to 45 minutes when we go through financial modeling that you can gain something useful from that, and I look forward to that. We can have some discussion or asking any questions to make this webinar a very useful investment of time. So today, as moving forward, today we're really talking about balance sheets and financial models and income statements and all of the types of financial reports that are very common and standard inside companies and organizations, how they're used and how they can actually be used to combine some historical data and new data, put that stuff together into a financial model template that becomes a basis for us to start asking what-if kind of questions when we're looking at how to optimize the financial performance of any given business or business unit. So as a quick agenda of what we're looking at today, I'd like to introduce us very basically and very quickly what I refer to when I'm referring to, what I mean when I'm referring to financial modeling. It is quite a large topic and has a lot of inputs, so there are some key concepts and some points and best practices that I'd like to touch on. And then we'll start looking at a balance statement or a balance sheet. And what that's really all about is one of the inputs into a financial model. Now, any financial modeler needs to understand things like balance sheets. They need to understand income statements, cash flow statements, stock equity, and a whole series of other things, whether we're talking about general banking, investment banking, derivatives, or any other kind of financial transaction and financial kind of topic. So the balance sheet or the balance statement is one that we'll look at. And in order to get a good understanding of how they all fit together, we're going to look at an SEC filed company being LinkedIn, I'm sure you've all heard of. We're going to get some data from that, some annual reports, or potentially we could do quarterly as well. But this time we'll do annual reports, and we'll look at where the data exists with the intention of being able to create our own template for a balance sheet, not necessarily a formal balance sheet, but a template for a balance sheet that we can then use for financial modeling and for general prediction work, and look at how things start linking together. We'll do the same with the income statement. Once again, I've pre-prepared some of this, so we'll only do the parts where identifying where you would get the information instead of just copying and pasting between spreadsheets, and also what kind of things we need to think of when we're doing that. At the end of that, we will have a good idea. We'll have a balance sheet for the last 2 years for LinkedIn and also an income statement. With that, I think we'll be in a position to understand how a template sort of fits together and how this might be useful to you in your own work. After that, we'll move on to understanding a little bit about what EduPristine's masterclass in financial modeling that covers this and a whole series of other topics. We'll go into the details and what you can expect after doing that, what kind of skills you could expect to have that, and what kind of value you could bring to the organization or any prospective organization. And we'll look at the schedule about the next batch of these coming up and how EduPristine's education model works and why I think that's a good idea for many people to attend. So let's start with what financial modeling is all about. We build models to try to understand the reality of a business. A financial model is built And it's always built using inputs of what I call generally accepted financial reports as inputs. That means people who are being involved in this process could be accountants, they could be financial analysts, they could be actuaries, or any number of other people. They are familiar with the tools that are being used, so they can help validate and contribute any models that get put together. The other reason is generally accepted financial reports, like balance sheets, like cash flow reports, like valuation reports, are freely available and readily available in every company. In publicly listed companies, for example, an SEC filed company, they must be on the website under investor relations. Same with LLCs or London listed companies and any other listed company. And private companies also maintain financials and get audited and things like that. So the information is fairly readily available. And that's great for a financial modeler because we can request that information. If we understand what information goes where, what's calculated, what is not calculated, we can start building models. And this is actually what happens in industry. Either you're an analyst inside a company, or sometimes you can be external to that company and you could be commissioned to do so, but we can get access to the data. If we know what data we're looking for, we can start modeling. Once we put some of the data in there, we can then go through and combine so that we have some historical nature data that tells us what's happened in the past, and we have some forecast data. We can put projections in, and then we can start varying particular points of the or inputs in that. So it could be varying our cash expenses, varying the amount of stock that we make available, or any other number of things that you'll see when we start looking at the balance sheet. And we can look at how that affects other areas. Now this could be as simple as something that gets done in an Excel sheet like we're going to do today, or it can increase in complexity somewhat, where we would need some statistical and mathematical packages and probably some big data or databases and to work with that. But whichever one we have, be it complex, be it medium, be it very simple, the best practice is still always to create a template. So we create the template once, we get it right, we use it, and we validate it and make sure for accuracy with the historical data. And then we start putting projection data in to see how that looks. And the best practice template does the calculations for us, and that tries to reduce the risk and the error that we can from interpreting data. And as I mentioned before, these things can be done in Excel or Numbers or OpenOffice, or they can be done in rather large packages like SAS. Today we'll be looking at Excel, but what I would indicate is no matter what package you're using for financial modeling or a set of packages, things like Excel and Numbers are great for data manipulation, and they are almost certainly going to have some role to play. So some of the things we look at today will still be useful no matter what package you use. So moving forward, let's just look a little bit about income statements and balance statements. So these are the inputs to this particular financial model we're talking about. So I'm first going to talk about what I call a balance statement and what's generally accepted to be defined as. Then we're going to get one from LinkedIn, and we're going to manipulate that into something that takes raw data and puts it into a model form that we can reuse. And then we'll do the same with the income statement. So starting with a balance statement. Anyone on here with an accounting background would recognize that a balance statement is really a financial position at one point in time, or a snapshot. As a result, any balance statement must have, or balance sheet must have, a date as of which it is valid. And that's one of the things that you must put in if it's not already immediately there. And the other key area of the balance sheet is it has assets, but it also has liabilities and owner's equities. And in the next slide, I'll talk a little bit more about these. But before that, I'd like to point out that the word balance sheet is no coincidence, because balance sheet must be balanced on both sides. And an important thing to remember when we're building a balance sheet and a financial model where a balance sheet is there is I like to always put in a check section of that balance sheet to remind me, or at least verify before I go any further, that the assets and then the combination of liabilities and owners and equities are in balance. So they should add up to the same number in the end. So when I look at that on a diagram, if I start from the left, we have assets. Now assets really depend on the industry you're in as to what an asset could be. It could be anything from maybe a patent or a licensed piece of software patent that you can on-sell. It could be a mine. It could be some set of equipment, large warehouse, or anything that's owned. And it could also include cash, specific equipment to do your business. So it could be a plant, it could be a mine, or something that you can on-sell that you own. On the other side of the balance sheet, you'll have liabilities and your ownership. So liabilities is things that you own. So where you have to pay. It could be accounts payables, it could be anything to creditors, it could be repaying loans and debts or anything like that. And the other side, the other side of that is also owns equity. So anything that you can claim to own. It's sometimes called residual equity. But again, so it's the things that we have borrowed to do things and the things that we have brought in is the side on the right, which is liabilities owns equities, and that results in the assets that is owned or is available to the organization to operate. Now there's one point to note about an asset, and this is where people can get confused about how things really balance. But let's say that I've earned or I've borrowed money through a venture capitalist or from a bank or something like that. That's money that has now gone into my account. I have a liability to the person who lent me that money, be it the bank or the venture capitalist. It is also an asset of money I have not yet used. So it has to be added on both sides to keep things in balance. This tends to take some engineers like me, it tends to take us by surprise sometimes, and we think, but wait a minute, why would it be on both sides? I know where it's supposed to go. But balanced accounting is all about the precision and the disciplined nature of making sure that everything we add on one side is on the other side to ensure everything comes out to zero at the end, because when it's balanced, it's clean. We just want to try to remember that, because then that will explain how some of these things work with the income statement as well. Another diagram to have a look at this, and another way to explain it is, I mentioned the right-hand side was liabilities and shareholder equity or owner equity, and then the left-hand side is assets. So the right is really where the money comes from. We are the borrower, we get investment from companies, it could be long-term liabilities, there could be things that I brought in. Where does the money come from? Once the money comes in, this on the right-hand side, that box under liabilities and shareholders and equity is one big block of money or one big number. In a balance sheet, that will be the same number on the left-hand side, where the assets are. All the money that's come in, all the investment that's come in are assets. They could be fixed assets that we own, they could be money that we've borrowed, they could be things that we've brought in, they could be other various tangible or intangible assets. The point is they should be the same, and if they're not the same, then we're not balanced. So we have, again, the side on the right where the money comes in, it forms a block of money or assets that we can use to pay out. That's the way I've always thought about balance sheets and balanced accounting, because then that takes away some of the confusion that comes from why, if I earn money and I become a liability, how does that become an asset? That's a conversation that I've had many times. So at the end of the webinar, we'll have created something like this, and you'll all be able to create them too if you can't already now. The point on this slide, though, is this is presented as part 1 on the left-hand side as assets and part 2 on the right-hand side as liabilities. Balance sheets don't actually look like that. You'll see on part 1 and part 2, the column is B. So they're actually all one column down the left-hand side, and then the years are on the right-hand side. And we'll see that when we get to there. But what I really wanted to, or when we get to the actual example, but what I did want to point out is, I mentioned it a little bit earlier, is down the bottom we have check, and we have 3 columns that say true. That's a function that says, does the value for total liability stockholder equity for 2010 in this case, it's 238,188. Does it equal the total assets for 2010 on the left-hand side? In this case, it does. That's also 238,188 thousands in US dollars. So a large number, 238 million. If they add together, if they subtract together, and they form the same number, then we are in balance. So we are always checking that. What you'll see in the example when I have done this as well is not only do I add the check, I call it check to be balanced, I've also added the difference. So if we're ever out, if there's ever not in balance, I can see by how much, and that gives me a clue to where to start looking. So enough talking about balance sheets, let's talk a little bit about how we get the data for them. So the scenario here is, I'm a hired consultant from LinkedIn, and they've asked me to come in and to create some financial models because they want to talk about a reduction of what the effect of maybe reducing cash flow is or reducing expense by X% over the next 3 years. What other indications might we have? We're not going to talk about the model today. That's what we would talk about in the masterclass. What we're going to talk about is, what do I do next? How do I get the data from LinkedIn? What do I do with that data? What massaging do I do before I call it a balance sheet and start using it as a formal input to any financial model I do? Well, LinkedIn being a publicly listed company, their information is available online just like any other publicly listed company. And it's through this link here. So I'm just going to click on that link and hopefully bring up a web browser. There we go. Austin, can you see this screen?
Hello?
Are you able to see Are you able to see the screen for the SEC filings?
I see something that just says download all the annual filings and reports.
Okay, that's fine. I'll stay on that one then. Okay, when we're using webinars, it's not always able to go easily to websites and things like that directly. If we were to click on that link, though, we would have got to this area where it talks about SEC filings. And when we go into there, we can look at SEC filings, both annual ones, we can look at proxy ones, we can look at any point in time, and we can also look at shareholder information under the section 16. In this case, we're looking for the annual reports because we want to create a financial model over a number of years. That's what I have been asked to do. But if we were asked to do it over a number of quarters, we would get quarterly reports instead. Now, a 10K filing just means an annual report. That same link, if you were to click and go to quarterly, you would say, I think it's 10Q for quarterly reports. And on the right-hand side, inside that square, you'll see that there's a PDF icon and an Excel icon. We want to download those. Now, I download the PDF files and the Excel files. Some people would just download Excel. The reason I download the PDF file is because I can then see how LinkedIn and their financial teams, how they classify certain assets and certain types of income, because it's much more formatted in the PDF file for the annual report than what it is in an Excel file. So if you were to do this and download this, you'll see the difference, and we'll see them shortly now. So what we see here is actually a screenshot of the balance sheet inside LinkedIn. I'm going to go to the actual one that we've just downloaded, that I downloaded this morning. So I'm going to bring up Microsoft Excel. Are you able to see that, Austin? LinkedIn 10K 2013-0219 Excel sheet.
No, I still see download all the annual filings and reports.
Okay. I think what's probably best, Austin, then is what we will do is go through the presentation, and if we can get the Excel sheets showing on the webinar afterwards, then we'll go back to them. Is that okay?
Sure thing.
Yep. So if we were to open up that sheet, I'm not sure why we can't see it at this point. Down the bottom here, we have all these tabs. Now, for LinkedIn, there are lots of tabs. There's something like 80 or 90 of them. We need to scroll across until we get to the balance sheet tab, because that's what we're looking for. Now, as you can see, this is a balance sheet tab. It says who it is. It tells you the period it's there. And it shows that there's a lot of figures for both 2011 and 2012.
Which I don't see what you're trying to show right now.
Okay, find out the balance sheet template is what I'm looking at.
No, I don't see it. It's there in the presentation, right?
That's correct, yes.
Okay, I think I'll have to make myself the presenter.
Okay, that's fine. So I will...
Just 1 second.
I'm looking for the thing.
Just 1 second, please. Can you tell me what is the slide number, Richard?
The slide number is 12.
Richard, is it this one?
I can't see your screen yet.
Okay, you can't see my screen. Okay.
But I also can't see the little control panel now either, and I'm not sure why.
Okay, so right now, the one that I've opened is the one that says select the annual filings and download the PDF and Excel files. This is the one that you're talking about, right?
No, the next one.
Okay, so find out the balance sheet template.
That's correct.
Yeah,
yes.
all right. Just tell me when to change the slide. Okay,
sure. So what we see on this slide is really, it's the balance sheet that LinkedIn have put together and have filed with the SEC, the Securities and Exchange Commission in the US. Now, we see that there's, in column C, we have the data for 2012. In column D, we have 2011. That's because they're publishing for 2 years in this particular case. And if we were to scroll down that, we would see a whole series of things that go further. So I think we'll just move to the next slide, please, and then we'll see more of that appear. So here, what's actually being done, what's being demonstrated here is to take all of those assets, which go all the way down to the section that would have been the total of the assets, and we copy them into a new sheet in Excel. Now, I was hoping to be able to do this for you, but for this point in time, let's not worry too much. Now, we also need to copy across the data, but it's very, very important that we know what data to copy across and what data not to copy across. And that's what I'm going to go through next. So can we move to the next slide, please? Actually, to slide 15. It's creating the new template in Excel. Now, there's a few tricks that we want to go through when we do this. The first one is, because it's a balance sheet and we're going to use it for modeling, we want to create some description area at the top. So always leave a few lines down the bottom when you do this, at the top when you do this before you start. We need to copy across all assets right down to all equity. So remember I said the balance sheet is assets plus stockholder liabilities and then equity, owners and stockholder equity. We need to copy all of those across because we want to balance the whole sheet in its entirety and make it one entity. So we would copy those across, and then we need to do a little bit of work on massaging that data. So the next slide, please, Austin. We need to do some formatting of the data, and there are formatting rules that come with generally with balance sheets. So about bold, there'll be bold titles. There's going to be some italics sometimes. You probably want to call the years fiscal years as opposed to actual years, because in countries like Australia, when the fiscal year is not the calendar year, or in Japan, we want this balance sheet to live on its own without necessarily having explanations. And we can format that through Excel on the next slide by just using a custom format and adding FY. I tend to do that, but it's really up to the person working, but I tend to do that. That can be done when you format the cells and brings up that. And what we need to do is put in the quotes FY, because that means put the text in, and then put in the hashes to say digits. So then Excel will still store this as a number, so we can use this for next year and the year after and the year after and not have to format again and again. Moving to slide 18, we also put in as also a specific date. I intended to point that out earlier and to emphasize that earlier because a balance sheet is at a specific point in time. It is not a working document, it's a document that summarizes up to a given point. It says nothing about the future. And moving on to the next slide, being slide 19. Now we want to copy across data. And it's always a good practice when we copy across data from another balance sheet to recognize whether that data is actual raw data or whether it is calculated data. Now in this case, raw data is copied across for things like short-term investments, accounts receivable, prepaid expenses. They're just actual data fields. However, cash and cash equivalents are calculated from another sheet. Now, if we downloaded the link on the LinkedIn, the SEC filings for LinkedIn for 2012, near the balance sheet tab, about 2 or 3 along, there's also one called cash flow. And in cash flow, when it talks about cash flow and equivalents, there will be a corresponding row down there for each given year that will be the number that goes into here. So now we've got 2 sheets that are linked together or connected. Now you can either manually link them or you can automatically link them. The point is, if the model is a template and is able to self-calculate it as things go on, when we ask what if analysis and we start changing values to see what happens when we're trying to tune things, we do not need to worry about whether the calculations are correct. We can do the calculations now on the historical data, verify they're correct, and then trust that moving forward. I said a best practice was to create a template and move forward, be it with Excel or anything else. This is the first point of doing that. Similarly, on the same slide, if you look at the total current assets, the data coming from LinkedIn is a raw data value in there, whereas a real model is going to have a summation function there to add them up. This will happen all the way down, and as I mentioned previously, if I look at the PDF file, that comes down, when I get to the balance sheet of that, I'll see how LinkedIn groups these things together, and what it uses for balance sheets and what it uses for notes and things like that. And that helps me understand how the company operates. So when I'm doing a financial model with that company and with LinkedIn in this case, I can then speak in their language, so their financial analysts and their financial controllers and things like that, and I can communicate in a way that is going to be helpful without misunderstanding or misinterpretation. Next slide, please. So once I've done all that, I've done assets, and now I'm doing stockholders and liability. There's a few points that I'd like to make about this. In stockholders' equity, there's a number of things in here that we probably want to define. They are not the names that you're going to find necessarily inside a fully detailed balance sheet. For example, we see preferred stock and common stock. That's usually there. Class A plus B common stock. Now, what does that mean? On the balance sheet that's coming from LinkedIn, we're going to see that it's Class A and then some notes and description about the Class A stock and under what circumstances they issued that. Now, Class A stock is just ordinary stock that any investor, be it internal or external, can buy. It needs to be viewed, it sometimes, depends on the model, may need to be viewed in a different way to Class B stock. Class B stock is defined as stock that is usually reserved for founders or key people inside an organization, because people who hold Class B stock will typically have, or actually will always have, a greater voting power than people who hold Class A. For example, there's one company I know where the Class A stock holder has 1 vote. A Class B stockholder has 1 vote, and that counts for 10. So it's often important, depending on our model, what we're looking to do is, if it's only stock we're interested in, we could combine them. If it's something different, we would separate them. This is an example of where some of the variables come in when we're looking at modeling. So whilst it's written here as Class A plus B common stock, normally, and from a best practice perspective, I would separate them out so I have individual variables that I can look at in terms of making changes in the future and seeing what effects that could have. Next slide, being slide 21, please. We've now brought ourselves to the end of how to build a balance sheet now in Excel. Now, what I was really trying to focus on before we go any further was just understand there's data there, there's a lot of copying and pasting of data, there's formatting of data. That's all Excel functions, and most people would be well aware of that already. What was not immediately obvious when you look at these things is what's calculated and what is not. So the formatting helps identify what needs to be calculated. The PDF reports that LinkedIn provides show how they format it and how they calculate. So when you're building your model, you can follow the same things. We're all talking in the same language. And once we've done that, we can then also indicate, we can get the cash flow information from the cash flow sheets, we can get the stock information from the stock sheets. So we're starting to build a real model that shows all these different parameters as they change over time, and they're starting to come together into something that gives us a better picture of how the business is operating financially and how we expect it to operate in the future. What was not in those slides, but I did mention earlier on, is the check area that says, did the assets equal the liabilities plus the equity? If they didn't, something is wrong. And I always put a function in there, and I always try, if I can, to make that function change the color if something is wrong, so I can see it immediately. So moving on to the income statement now. Next slide, please, Austin. Now, an income statement is different to a balance sheet because what it does, it looks at things, the financial performance over time. It doesn't necessarily look at a given point in time, it looks at it over time. And it uses different terminology to do that. The first one being it uses revenue, whereas instead of inflow that was coming into the balance sheet, it uses expenses, and that's things and gains and losses from continued or discontinued operations. What that does is it brings into account profits, and income is usually the word that we will use, and also depreciation and amortization. Next slide, please. To put that on a picture to try to see how this all fits together, we start with revenue on one side, and then we look at all of the different buckets that revenue ends up in as part of the operation of the company. If we were to start at the bottom and then go up to the top, we're going to be able to form various things. But if we have all revenue, start at the top, we need to pay some wages, wages. We need to have overheads that come with things like plants and general just operating expense and administrative expense. We have depreciation that isn't a cash expense, nor is amortization or deferred tax, because we don't actually have to pay, but we do have to account for it because it is effectively a cost into the business and thus an income. It needs to appear in an income statement. And then all these other things too, like how much is sales cost, how much is our marketing cost, what about interest that we've received, what about tax we need to pay, and we get to a point of a net income. Now, you'll see here that we have EBITDA or EBITDA, as sometimes called. That stands for earnings before interest, taxation, depreciation, and amortization. So as you can see, that is the earnings before interest, tax, and amortization, plus the depreciation of depreciated assets being a non-cash expense. So we put those two together, and we need to make sure, just like we have assets equals equity plus liabilities, we have a similar equation here to balance things. So we're balancing revenue and how it's used, including what portion becomes net income or otherwise known as profit. Next slide, please. Now, at the end of this webinar, you'd be able to create this, but LinkedIn have been very nice and created it for us, this picture of how an income statement would look. Again, this comes straight from the income statement that we would have seen there. What I would like to say again is the blue areas are raw data that has just been entered and been summed up over time by the accounting teams and the financial teams inside the company. You sum them all together, so cost of revenue through to depreciation and amortization gives you your total cost of expenses. So total cost and expenses. So now we have revenue at the top in cell C5 for 2010, and we have expense in C12. So to find out how much of that's net income or profit, we need to actually subtract the two, and that's the amount. We might have some other income or expenses. If it's expense, it's red. If it's income, it's going to be black, because red means negative. And then we can, if we calculate that, and we can then say our income before our tax, then a provision or an estimate of tax if we don't know the exact value, and a net income. So once again, we've balanced these fields. If we were to add all of these things together, specifically if we were to add the total cost of expenses plus then the taxes and the net income, we should get a balanced value to that of the net revenue. Again, so that's what we want to try to do, to put in a check to verify we haven't missed anything, because we might have typed in a value incorrectly and then things would have been out of whack and we would not have known. And that actually did happen to a company that I was with at one point in time. It wasn't an incorrect value. A numeric value was accidentally entered as a text value and wasn't counting towards a calculation, and somehow it didn't balance. So if I put in, for example, the check and the difference of where the change is, and let's say that 44,826 was entered in as text accidentally instead of a numeric value, the net difference would have been 44,826, and I very quickly would have been able to identify that problem. So what we've just done is we've taken data, easily obtainable data from LinkedIn or any other SEC or LLC file company or any other publicly listed company, and we've put it into just an Excel template to be able to add some calculated data to that, put some checks in it, and use it as a basis for inputs into a financial model where we could then draw from 2012 up to, say, 2015 and start changing values of sales and marketing, or changing values of product development, or changing our way or our process for depreciation and amortization, and see what happens to our profit in the end for an income statement. And the same thing we did with equities and stock and things like that with a balance sheet. So I want to emphasize that again. We have not created balance sheets that you would just file. They're already created. We've taken the information out of them and we have created them into a template so we can use them to file if we wish, and we can also use them for modeling purposes, and that's really why we're there as financial modelers. Without understanding how these things are put together and what's related, what's not, and how to find that information, we're unable to enter the first step of the financial model. So now I'd like to move to the next slide, and I'd like to talk about the masterclass where we take this short preview that I've taken and we then go into it in a lot more detail and actually go through and find these numbers, build these sheets together. So move to slide 26, being the highlights of the financial modelling class in Sydney and Melbourne, one thing that I think EduPristine offers is a good blend between classroom training and online training and self-based training. So there's 4 full days of classroom training by industry experts. This could be trainers like myself. This could be people who are in companies who work with financial models every day, a combination of them, but certainly people that are very good to have in a financial modelers network. Why? Because we do this every day. We have different ways of doing it. We also have different suggestions we can make, and it's all good for the network to be able to get that together. But not only that, there's self-study. There's lots of self-study and self-teaching that is required with financial modeling. It's an ever-increasing area. So to get you started, there's 20 hours or so, and this is continually increasing. It's a bit like this, where the video comes to you. Also, in order for me to feel good as a trainer and feel like I've achieved what I'm trying to, my goal as a trainer, I want to be able to give you something that you can take back to be able to use to either do your job better or to find yourself a job in financial modeling if that's what you're attending this for. So samples, just like the templates we've created that have things like the checks in them, that have formatting for summations, for calculated data or any other kind of operation, and other examples and guides that walk you through. So not only have you done the training and you've got a lot of information in your head, you've done your self-study, you've got a place to start when you actually need to do it. One of the things that I was trying to show today, but we're coming up with Excel, was the unfilled and the filled Excel template. So you've got the thing without the calculations put in it and the thing with the calculations put in it, so you can work your way towards getting to the filled in one because the filled in one is accurate. One thing that I found that is very good about EduPristine, and I think it's a good reason to work with them, is they have a doubt clearing concept. It's really an online forum. It's a series of online forums where you have people like the trainers also monitoring at times to try to help individual students when I'm unsure of this particular area. I really don't understand what to do. I'm not sure if I'm doing this correctly. We don't want you to go away not understanding. We want to spend the time to make you understand. So not only does that happen 24/7 online through an online environment, with each one of my students, I always give them my contact details, and I say if there's something that's really bothering you, feel free to get in touch with me, and I'll help you how I can. And the last and most important thing is any financial modeling class that you do with EduPristine is approved by GARP CFA, and it has credit hours, so you can actually use that as an accreditation towards, for example, a CPA or another kind of financial qualification, and it's recognized internationally. It's always something that's important. Next slide, please. I'll actually go to slide 28 about the rewards reaped after financial modeling class. First thing is, what can you expect to be able to do when you've come? Okay. The first thing you can do is you can learn how to create accurate and ongoing templates of the standard financial models and the standard inputs to financial models, like the balance sheet, in Excel. We're not using numbers or things, but we're doing that in Excel because they are your inputs into modeling. Anyone in financial modeling is going to be required to have good Excel or numbers or both skills. They may require some other areas as well, specific to companies, but ultimately Excel is going to be an absolute must. And if you've gone through that process a few times and you've gone and done it at home afterwards, and you can then build a better and error checking or self-checking report. It's always good to know your report's accurate, and if it's self-checking, you increase the chances of that significantly. That's why I always talk about the best practice to put your check row in, put your difference row in, color code if you can, do anything you can that's going to help point out an error to yourself before you submit. Because once you've submitted, then backtracking is much more complicated. You can also understand that at the end of these classes, you understand some of the best practices and common mistakes when it comes to financial modeling. I explained a common mistake with numeric values for enter this text. That can happen. It's very, very hard to know unless you've gone through and understood the best practices like the error-free and the self-checking reports. At the same time, after going through this class and having been able to interact not only with other students in the class but also the trainer, you'll learn from the experience of these trainers of how do we go about doing this when we were really doing it before we were training, or when we're doing it when we're not training. Understand what do we do that can make it look good. I'm not here just to teach you what's in this PowerPoint presentation. I'm here to try to impart best practice and experience it on you as well. And that's certainly what I would do in a training course, and most other trainers that I'm aware of would also be quite happy to do that, because that's how we make a difference to you. Anyone can read these presentations, anyone can read anything like this, but we can make a real difference to you if we impart best practice. So even if it's one thing that you go away understanding better than before, that's helpful. And there are plenty of Excel features that are hidden. We just learn over time, and we learn by recognizing that. So there's command shortcuts like Control-1 or Command-1 if you're using a Mac. There's another one for automatically copying formulas or formatting and things like that. So a lot of those tips and tricks will also come up in the course, because financial modelers and people preparing these kind of sheets use them all the time. So next slide, please. Oh, sorry, and the slide after that. The next batch of the course is currently scheduled for the 25th of February. This is a 4-day class at that cost. Now, Kiara Smith is a contact person for you at EduPristine. She's worked with me for a long time now. I've always had a comfortable working relationship with her. Her contact numbers are there. She's looked after me a lot, so I sincerely believe that she'll also look after anyone who wants to get trained and attend these classes. And to the next slide, please. Oh, sorry, the slide after that about the Premier Finance Training Provider. I'd just like to finish off and tell you a little bit about EduPristine as to why I believe their model is good, why I am quite happy to speak on behalf of them and work with them, and why I believe they're a good training organization and well suited to just about any company or individual. First is, they've gone about getting a lot of international certifications. Now that's very important, because without that, you might be getting good training, but without the certification and the piece of paper that can help, that training may not have as much weight in an interview situation or in a recognition situation as you might like. They've done this, they've got these certifications, they're internationally recognized, and they do this around the world. So I've conducted classroom trainings for them in Australia. I've conducted these online, but there are also people who do it in the US and Singapore and other countries as well. And when we're talking about extending that to video tutorials, online training, and doubt clearing, that goes over to more than 40 locations around the world with a large number of training hours that have already been done. There must be something good to do that. So their investment team and their management team are coming from very respected areas, and some names that some of you may be aware of. And not to mention also the faculty pool, the whole organization, be it direct employees or indirect employees around the world that contribute to things, is also a large portion of people. And if you include the trainers in that number, then what we'll add is a whole series of industry experts who can also contribute and continue to contribute to make sure the courses are relevant to the business at that point in time. There's a large number of customers. I'm going to talk about them shortly, but I'd like to point out that Fortune 500 companies, especially around financial modeling and finance-related training, are very particular about what kind of company they use and how they interview them. I've personally experienced that as being a trainer in one of those companies and being interviewed to make sure that I meet what I would call their standards. And as a result, yes, if you can be selected into one of those, it usually does have quite a big deal. Last, as I said, there's a good boundary, there's a good balance between online and offline and classroom and intensive training, things like that. So when you have that good balance, you can usually get one or more of those different training mechanisms and mediums to click for individual attendees. Next slide, please. Now, the authorizations I talked about, FA and FPSB, about financial planning in India, they're all internationally recognized. They're very, very important, and I would say as a prerequisite for any financial modeling related training class. If you were not having this, I'd be questioning the school. Next slide, please. Now, this is a slide that I find particularly interesting because trainer and also in other parts of business, I've had direct contact with all the companies on that list except Franklin Templeton. Mizuho was specifically working with them in Japan, along with ING in Amsterdam, but also JP Morgan and Credit Suisse was in Japan, Hong Kong Shanghai Banking Corporation, HSBC. I've worked with all of those. Now, HSBC was a unique situation because I did a lot of training for them a number of years ago, and every time I trained in the department, I would be interviewed to determine whether I was a suitable trainer and whether they were comfortable with me or not. And that just shows that they invest a lot of time into identifying who they invest their training and who they entrust their training to. So given that HSBC do, I would suggest that it's good for just about anybody to do that, because Mizuho and HSBC were very particular. It was quite a large job to get accepted as a trainer there. Next slide, please. Not only around companies, but also around educational institutions. I've only personally been involved with the National University of Singapore in US on this one, but once again, they were teaching for MBA students and also for undergraduate students, and they asked for some of this assistance from EduPristine. Now, it's very important to recognize that for a university, if asked for teaching assistance, then there must be something going right with that particular company that's being requested. So moving on to the next slide, just on a map to give you an idea where training has actually been done. Obviously Australia, there's a great big orange Australia there, so it can be done just about anywhere in Australia. Certainly online, and if it can't be done in the classroom, it's going to be in a city near you. So I would suggest that, again, this is a good model for not only individual trainees, but if people wanted to look at something for more regional or even international, then I believe there's a number of different areas that ranging from the US through to Asia, through Africa, into Australia and into Europe. Next slide, please. Now, the number of topics that are covered inside various types of courses varies, or in different courses varies somewhat. And the way it's done is we try to identify experts who can teach these in one block. So I'm in no way a real estate modeling person. I am, however, a derivatives training person. I'm an analytics training person. So given that I have certain expertise and other people have different expertise, we try to work on the idea you get the expert in there to do that instead of one person who trains this whole lot or one group of people who train this whole lot. The one group of people who train all courses and need to be trained on those courses and then need to be able to deliver them. I have found that works generally when you're training a course, but it doesn't bring the added experience and the added real world scars that come with, for example, doing statistics, or that come with doing financial models, or that come without putting in a check in your balance sheet. So again, the educational model that's being offered by EduPristine I think is very good because it does identify industry experts to do areas of which their expertise is clear and to do it in areas where it's not. And I have no interest in or no intention to be able to teach people about power sector modeling or mergers and acquisitions, for example, but I'm very comfortable and very happy to teach you about financial modeling, about balance sheets, about predictive modeling, about basic statistics, and how they all fit together because they are directly linked. So with that, I'll move to the next slide. I've included Kiara Smith's contact details there. So there's 2 phone numbers and her email address. She's the contact person if you intended to register for one of these masterclasses. And with that, I'd like to thank you all for your time and attention. I apologize that we're having a little bit of difficulty with the Excel side of the webinar, but thank you very much to Austin for taking over to control the slides. And at that point, Austin, I'll hand back to you if we would like to open for any questions.
Thank you, Richard. Does anyone have any questions? You can post your questions and Richard will answer them accordingly. Any questions, anyone?
Sounds like everyone understood everything.
Well, that's a good thing.
Yeah.
To the people who might have joined this webinar late, the recording will be available. All you need to do is give me about half an hour while I upload it, and it will be available to you. All you need to do is just fill in the registration page once again, and then you can access it. So if there are no further questions, I'll end the webinar for all of us. No questions? Okay, thank you everyone for coming, and thank you, Richard.
Thank you very much, Austin. And have a nice afternoon, everybody.
Yeah. Bye-bye.